19.2 is talking about calculating depreciation expense. So we have 3 learning objectives. You need to be able to calculate depreciation expense. You need to be able to calculate depreciation for a partial year, and then calculate accumulated depreciation and book value. So first thing that we're going to do is look at calculating straight line depreciation. So what we're going to do first is we're going to take the original cost of the item and we're going to subtract from it the estimated salvage value. That's going to give us what we believe it will depreciate in for the time that we own it. So here we have something that we paid $8,500 for. We estimate that the salvage value will be $500. So we're estimating that while we own it, it will depreciate $8,000. Next thing that we do then is we take that estimated depreciation expense and we divide it by the estimated useful life. And that will then give us how much we believe it will depreciate each year. So we thought it would depreciate for $8,000 while we owned it. We're assuming that we're going to own it for 4 years, so we're going to divide those two numbers. That means each year it will depreciate $2,000 in value. And now we need to look at calculating depreciation expense for part of a year. Now in this case, in this case that they're saying that our annual depreciation is $900. Now there's 12 months in a year, so simply we're going to take the annual depreciation divided by how many months in the year. 900 divided by 12 would be $75 a month. So that means each month that object will depreciate in value $75. Okay, now to figure out that depreciation for a year then, for when we own it for a partial year, we're going to take the monthly depreciation expense times how many months we owned that object or that asset. So $75 a month, it's saying that we owned it for 4 months, so 75 times 4 would be $300. So because we only owned it for a partial year, it's not going to depreciate for the full $900. It's only going to depreciate for what we owned it for $300. Accumulated depreciation, that's where we're just adding up how much it has depreciated since we've owned it. So here we're looking at, remember, we see this is year 2 and year 3 depreciation expense. Year 2 means after year 1 and 2, they added it together to figure out how much it had depreciated. Okay, and now we're adding year 3 of depreciation to get the accumulated depreciation. To figure out book value, we're going to take the original cost of the asset and we're going to subtract what the accumulated depreciation is, and that will give us our ending book value, so what it's worth to us right now. So if we have an asset that we bought at $3,000 and it's depreciated $2,700 since we've owned it, the ending book value, or what it's worth to us right now, is $300. Audit your understanding. Number 1, which accounting concept is being applied when depreciation expense is recorded for plant assets? Remember, you're often tested on accounting concepts, so make sure that you're paying attention to those. This would be our matching expenses with revenue. And number 2, what 3 amounts are used to calculate a plant asset's annual depreciation expense using the straight line method of depreciation? We would need to know the original cost, the estimated salvage value, and the estimated useful life to figure out straight line depreciation. Move on to 19.2, work together, and then the 19.2 on your own.